for in terms of their performance to the end of August, and I just want to focus on the 1 year and the year to date again. You can see the South African JSE Sharia Index, which is the green bar.
Yeah.
Right, and just focus on the 1 year column and the year to date column. The South African Sharia Index is up 33%. Year to date, the South African Sharia Index is up 36%. That's absolutely dramatic, and you can see it has outperformed most of the other let's call it benchmarks out there. Now you may ask legitimately, why has it performed so well, and why has it performed so well relative to the other
Stock tips, we have market updates for you. We have great people like Saleigh Salaam presenting the markets and what's happening out there in the world. And if you like the show, please give us a thumbs up, leave a comment, hit the bell icon. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back to the Campus Dialogues, a Muslim Views production in affiliation with MuslimFin. MuslimFin, your roadmap to Islamic banking and finance. I'm your host, Ali Saleigh, and this evening we have a great episode for you. We have our good friend Saleigh Salaam back on the show, and here to introduce the show, and our guest is my good friend and colleague Siraj Buzik. Siraj, good to see you.
Assalamu alaikum, Ali. How are you doing?
Wa alaikum salam wa rahmatullahi wa barakatuh.
It's always good to be back in studio.
Yes,
Looking forward
absolutely.
to another amazing show. And like we always say, another week, another podcast, a podcast where faith meets finance. I'm Siraj Buzik, and every week we delve into the Islamic principles that govern our financial dealings. And whether you're here just to understand Islamic finance, you're building wealth, or planning your estate, this is the place to be. And like Ali said, our guest is no stranger to our podcast. Saleigh Salaam, welcome.
Wa alaikum salam wa rahmatullahi wa barakatuh, and it's a real honor for me to join you this evening.
Saleigh, we're always happy to have you in studio. And I believe tonight you're going to do a market update or a snapshot of how the markets were performing. What are some of the key intakes that we'll be discussing tonight?
Yes, as you rightly point out, I'd like to sort of set the scene just in terms of how, let's call it a dashboard of indicators that investment professionals would typically look at to try and understand how different markets and asset classes have performed. And I think that would really set the scene quite nicely for your listeners as we delve deeper into the performance of and the outlook for different investments.
No, 100%. I think we're quite excited to get started.
Yes. So let's kick off with that presentation.
So the most important development that we've really seen in financial markets, I would say actually, has been the US dollar. The US dollar for the last 15 years actually has been on a rampant sort of strengthening path. Against most currencies, it has strengthened quite dramatically. But what has happened over the last sort of year and year to date in particular has been that the dollar has weakened. So if you look at up on the screen there, you'll see something that says DXY, which is really the trade-weighted dollar. And that's all in red, all indicating that the dollar has basically lost value year to date by around 10.5%. Wow. And that's important to understand because, of course, that would then have a knock-on effect when we look at the rand-dollar exchange rate. So the rand-dollar over that same time period has actually strengthened by around, year to date, by around 8.6%. The rand currently now at the moment is 17 rand 36. This is very important, of course, because we know that we pay for our oil, our petrol, essentially. It's the rand-dollar oil. It's the rand oil price that matters.
Yes.
Right? And oil being priced in dollars means now with a stronger rand, essentially our oil is cheaper. If you then look at the performance of global markets, you can see that emerging markets, after a very, very long time, also around 15 years of underperforming global markets, in particular the US market, has actually started to outperform. So the MSCI Emerging Market Index year to date is up 23.5% versus the MSCI World at 16.4%. And the S&P 500, it generated a return year to date of around 12.5%. What's very interesting, if you also look at that slide, is that the MSCI South Africa Index is up in dollar terms
Wow.
by 45%.
Okay.
In dollar terms.
Saleigh, let's stop there. Let's stop there because that's very interesting. Just for one moment, can you maybe just dive into that a little bit and explain to us why you think that is?
Yes. So the first reason is really, if you look at the next section, which says local equities, and I'll unpack it a little bit more.
Yeah.
Look at there is something that says the JSE Resources Index, the RESI 20. Now look at the RESI 20. Year to date, the RESI 20 is up 92.7%, 92.8%. 92.8%. That's year to date, right? We're talking about what, 8.5 months,
Yeah.
right? Almost 9 months. It is up 92.8%. And that has really been driven by gold and platinum.
Sure.
Now, when you look at the MECI South Africa Index, of course, gold and platinum also have a weighting in the MECI South
Okay.
Africa Index.
Okay.
And that has lifted the performance of the MECI South Africa Index. Really, the performance of gold and platinum have been, this, as we say, the star performers. All that glitters in this case is gold and platinum.
I like the way you put that.
Got to be a little bit poetic sometimes. Then, if you look at the broader market, the broader JSE index, sort of the mainstream index that South African investors would use, that's the JSE capped SWIX index. It's up 23.8%. You can see a massive difference between the JSE capped SWIX index of around 23.8% versus the resources index of 93%. Almost. The other sectors, financials, industrials, and even property, have done much poorly, much poorer rather. Of course, industrials have given you a respectable return of 18%, but nothing in comparison to the JSE Resources Index, which, as we said, is up 93%. Now,
Amazing.
what is also interesting is look at the performance of commodities. The oil price year to date, when just look at something that is called Brent spot,
Yeah.
that is down 9.5%. And for us South Africans, obviously, when we go and fill up our cars, the fact that the oil price is down almost 10% and the currency has strengthened over the same time period by 8.6% means that there's been significant relief on our pockets because you have a stronger rand and you've had a weaker oil price. And that ultimately means, inshallah, more rands and cents
Ameen.
that has fallen into our Muslim investors and Muslim consumers. And in fact, consumers broadly in their pockets over the last year. Look at the performance of gold year to date.
Wow.
40.6%. Platinum up 55%. And the reason why you've had the resources index up 93% is because the mining companies, right, the gold mining companies, the platinum companies are up north of 100% in many cases. And that's really been the key story. Another factor to also just keep your eye on is the performance of copper. It has done 17%. Now, yes, of course, not nearly as good as gold and platinum, but a 17% return in dollars. It's pretty good when you consider that the S&P 500 index, with all these tech companies and NVIDIA and Microsoft and so on, all these tech companies, that broader index is up only 12.5%. So copper, gold, platinum has clobbered the mainstream sort of US index. And copper, I think also just for your audience's understanding, is quite a key ingredient in terms of the whole drive, in terms of AI and so on.
Chips and electric vehicles and all of those things.
Right.
Absolutely.
That's right. If we go on to the next slide, I've broken it down to just give your audience a sense as to what are the top and bottom performers year to date and month to date. And I'm just going to focus on the image on the right, which is year to date. So looking at from the 1st of January, or let's say,
Okay.
or the 2nd of January, because first is a holiday, the 2nd of January up until the 15th of September, what have been the top performing stocks on the JSE? Look at Anglo Gold and Goldfields, 185, 177% year to date. Basically, you've roughly doubled your money over the last 9 months. You've had platinum stocks like Northern Platinum, Impala Platinum, Valterra Platinum, which is the old Anglo-American Platinum, up also, 132, 110%. Dramatic outperformance. And MTN as well, ringing up the profits. They're up 58%. Then you've got other stocks, for example, that have lagged quite a bit. It's really been, I would say, your so-called interest rate sensitive stocks that are very much exposed towards the South African consumer by and large, and interest rate sensitive like Mr. Price, Nedbank, Woolworths, Pepkor. You can see down anywhere between 10 and 26% respectively. You've also had Aspen down 38%. They lost a major contract, and that then impacted their forward-looking profitability quite a bit, and the share price essentially collapsed by 38%.
Just on Aspen, just maybe inform us a bit more on the contract. I'm interested.
Yes, so as you know, Aspen is one of our largest sort of pharmaceutical companies.
Yeah.
They under license, they manufacture selected pharmaceuticals. They lost quite a material contract, a US contract.
Okay. Is that because of the sanctions currently, or no? But does it have something to do with it?
Well, it does have something to do, I would say, with essentially not only sanctions, but also you've had the new administration in the US, looking to essentially retract from all kinds of where they've potentially provided aid towards other countries and so on, and Aspen was a beneficiary of this in terms of essentially being a contract manufacturer. Okay. So they lost quite a big contract, and consequently Aspen fell quite a bit, down 38%.
Okay, that makes sense. Yeah.
If you now look at the next slide, MSCI World Index, year to date, some of the major performance really has been your defense stocks. So you see stocks like Rheinmetall, Saab have done exceptionally well. Rheinmetall is up 260%.
Sure.
Dramatic. Saab, which is a Swedish defense company, up 172%. Gold stock, again, Kinross Gold up 152%. Dramatic outperformance. And you've had shifts once again, firstly, besides in the gold price, shifts in Europe's defense spending, which has caused many of these European defense stocks to do extremely well. Robinhood, of course, which is the US sort of trading business, that's done exceptionally well. You've had what you'd say increased gamification, as they call it, of finance in the US, where lots of retail investors have flocked towards trading platforms such as Robinhood. That has done exceptionally well, also up 208%. And then other sort of consumer-facing stocks also, again, all health stocks in the US have been impacted by a change in the health policy, or tighter sort of consumer conditions in the US. So Align Technology is a US dental company. You've seen the Lululemon Athletica down 58%. Even Deckers Outdoor, don't know if you use those tackies called Hoka.
Yeah.
They manufacture that.
Okay.
So next time, instead of buying a Hoka tacky, you go and buy Deckers Outdoor, because they own Hoka. So that's not financial advice, right? Yeah, so that's been sort of some of the major moves in terms of the MSCI World Index. If you now look at the next slide here, it gets quite interesting. If you look at selected indices in terms of their performance to the end of August, and I just want to focus on the 1 year and the year to date again. You can see the South African JSE Sharia Index, which is the green bar.
Yeah.
Right, and just focus on the 1 year column and the year to date column. The South African Sharia Index is up 33%. Year to date, the South African Sharia Index is up 36%. That's absolutely dramatic, and you can see it has outperformed most of the other let's call it benchmarks out there. Now you may ask legitimately, why has it performed so well, and why has it performed so well relative to the other indices?
And of course, in the Sharia portfolios or part of the Sharia kind of investment world,
Yes,
resources is quite strong in there, right? Because obviously that is Sharia compliant.
yes, that's right. That's right. But that doesn't necessarily mean that the portfolio managers may have the same amount of resources.
Or exposure to resources within their portfolio.
That's right.
Yes.
That's exactly right.
Yes.
Spot on. You're absolutely spot
Okay.
on.
So what is your besides just the resources? So you're saying that even though year to date the Sharia index is up 36%.
That's right.
That doesn't necessarily mean that that's the performance coming through in portfolios.
That's correct.
Okay.
That's absolutely correct. Your Sharia-compliant portfolios and unit trusts out there, they haven't necessarily matched the performance of the actual index. And
That's very interesting.
the JSE Sharia Index is up so strong because gold and platinum are quite significant weights within the JSE Sharia Index. So using your terminology, the fund managers in South Africa from a Sharia compliant perspective, they have not necessarily been as exposed to gold and platinum as much as the JSE Sharia Index.
Okay.
And that's why their returns haven't necessarily kept pace with the performance of the index. But I thought it'd be really interesting to just give you a sense as to how your Sharia compliant proxies or benchmarks have done vis-a-vis your traditional benchmarks.
Absolutely, that's amazing because, I mean, obviously on this show, that is what we're talking about. And we always say that you don't necessarily need to sacrifice performance when it comes to Sharia-compliant investments. And there we go. That's the proof is in the pudding, right?
Absolutely, absolutely. Now, if we look onto the next slide, and this would be my last slide, this is the performance of global equity. So now imagine you took your money and you invested it, not now in South Africa, you invested it essentially outside of South Africa. Okay, year to date, in this instance, the MSCI World Islamic Index, which is in green, has underperformed your MSCI World Index, which is in blue. So your conventional index, which is not Sharia compliant, which is in sort of what's that, almost like a blue color.
Yes.
It has done, for example, year to date, 15.2%, whereas the MSCI World Index has only done, MSCI World Islamic Index has done 11.8%. So in this case, Sharia compliant benchmarks have underperformed. Now, why do we have that disconnect? Why have we outperformed in South Africa, but we've underperformed globally? The big difference is we've had a significantly higher weight towards the top performing assets, which is gold and platinum, in the Sharia index in the context of South Africa. Globally, again, if we look at why it has lagged, well, the reason why it has lagged is because, of course, it has got a relatively lower tech weighting.
Yes.
And we know that globally, outside of South Africa now, tech is obviously a big weighting, and there it has definitely lagged.
Okay.
So you win some, you lose some.
But look, if we look at that and the MSCI World Islamic Index at 12% or just under 12% in dollar terms, is by no means bad.
No, absolutely. It's a good return, and in fact, year to date, as I said, a return of around 12%. Whereas if you look going back to sort of 1987 or so, when the MSCI World actually started publishing data, the long-term return for global equities has been around something like 8.7, let's call it 9% per annum for the year. Yeah. So to be able to do, let's call it 12% in 9 months is exceptional. Hopefully that gives your listener a nice context as to how some of the key indicators have performed.
Okay. So now you know what my next question is going to be. Where do you see the next 12 months going, Saleigh? Where do we go from here within the next 12 months?
Yeah, subhanAllah, you're always asking these.
I know you don't have a crystal ball.
Yeah, no.
But if you did.
I definitely don't have a crystal ball. I would say though, just in terms of longer term, let's call it themes, if you will. For the last 15 years, you've had an exceptionally strong dollar. You've had exceptionally strong US markets, coupled with a huge influx of foreign capital into US markets, into US assets, and that has pushed US assets to historically extremely expensive levels. So that's not only the market, the US market, the stock market, it is also their currency, and I have to speak about the currency. Yeah. So both the market as well as the assets are expensive. So if you had to, as a long-term investor, based upon information at hand today, the outlook for US assets including the currency, it's for much more muted and subdued returns relative to the last 15 years. Yeah. So what we're saying is, don't expect that you're necessarily going to get 15% per annum returns in US dollars, right? As you may have been accustomed to historically. Coupled with in an environment where the rand over the last 15 years has basically weakened. Now, what that then means is that the outlook for domestic assets, meaning South African assets, on a relative basis, is much better. Firstly, you've got the tailwind potentially of dollar weakness. Yeah. Remember, that was one of the first slides I showed you. Yes. Where I showed you that the dollar year to date is actually weakened by 10.5%. So you're potentially in an environment where you're going to have a longer term dollar weakness. And number two, you also have a stock market in South Africa on a relative basis that is offering significant value. So the outlook from our perspective, given the currency and given the differences in valuation, is that South African market is likely to do much better than the US market. If you are going to be investing globally, then you want to make sure that you invest in markets, I would say outside of the US. And it's really important for your listeners to invest not only in South Africa, but also outside of South Africa. Yeah. Because the South African stock market it's on about 1% of global stock markets. You want them to invest in companies, the other 99%, if you will, right? And to do that, our view certainly is that one can do that, but just be mindful that the US market is expensive. So there are other areas like Europe, Asia, emerging markets that are offering much, much better relative value, coupled with the potential for significant currency appreciation, for example, the euro, the yen, and so on. Does that answer you?
That definitely answers the question. Thank you for that insight. I want to touch on the RSE or the JSE Resource 20 Index.
Yes.
As we've seen, it's up by 92% year to date. However, many of these resource companies, they carry high levels of debt, right? And may not pass Sharia screening filters. How does a fund manager balance the opportunity in the sector with the strict compliance requirements?
That's an excellent question. So generally, the you're absolutely right. The Sharia boards, and they typically would also look at the level of indebtedness that a company has on its balance sheet, and there are different ways of looking at that level of indebtedness. That can be, for example, using purely accounting-based measures. For example, let's say debt. The amount of debt, let's say, to assets or debt to equity, right? Or you could take something that rather has got a market-based proxy that says debt to, say, market value of a company. There have also been instances where one can say, on the basis of management plans that they've communicated to investors, whilst their current debt levels are high now, there are clear plans in place, given their level of profitability and their management strategy, and their management strategy, that their debt is expected to come down in the future. Now, there have been instances, certainly in my experience, where even though the current debt levels may be high now, given management plans and management strategies to actually bring that level down in future, that the Sharia boards may actually be open to considering that, notwithstanding that the current levels are high now.
And so, like on the other end, the JSE Financial 15 Index has barely moved year to date.
Yes.
And I think conventional banks are a major part of this index.
Yes.
And are excluded from Islamic portfolios.
Yes.
Does the underperformance create a relative advantage for Islamic equity funds that has avoided them?
Yes, absolutely. Once again, you're spot on. But remember now, these things go in cycles. In the current environment, is definitely acted as a tailwind for Sharia-compliant funds to not be invested in, like you say, in the financial 15 index, or broadly speaking, financial stocks. But at some point in time, given that everything is cyclical, right? Everything is cyclical. There will come a time when financials do well. And because Sharia-compliant funds can't invest in them, they will then lag as a result of that.
Okay.
Right? They will definitely lag. I think probably one of the iron rules in life, in markets, indeed, in fact, in the universe. In the universe, the iron rule is cycles. Night is alternated with day, right? Everything is in movement, right? Everything is in movement, and that applies equally to markets. So yes, at this point in time, financials are lagging, and Sharia-compliant funds are certainly benefiting from it. But at some point in time, it will reverse.
So on the financial piece, you may not be able to expose yourself or a Sharia portfolio potentially to, financials or the banks within South Africa.
Yes.
But that doesn't necessarily mean that you cannot have that exposure to other banks in, let's say, Saudi or other parts of the Middle East. to still try to get that type of performance or exposure to financials?
Yes, absolutely. You are correct. You're absolutely correct. I think one of the key sort of benefits of financials, though, certainly within the context of emerging markets such as South Africa, is that they give you exposure to the domestic economy. So let's say you invest in a Saudi bank or you invest in an Emirati bank, what you are going to get exposure to is really the Saudi economy or the Emirati economy. Whereas you invest in a Nedbank or invest in a First Rand, yes, of course, they do have other operations outside of South Africa, but I'm simplifying. You're essentially going to get some or other proxy, some better than others, on the South African economy. Now, Sharia-compliant investors, though, just because we can't invest in banks doesn't mean we can't invest in things like Mr. Price, for example, which, as I also showed you there, was one of the top underperformers year to date, right? And there you also get exposure to the South African consumer. So yes, we can't invest in Sharia-compliant funds may not be able to invest in fact, they can't invest in banks, but they could, for example, invest in, let's say, Mr. Price, for example, right? Or perhaps some of the other retailers, depending upon what the Sharia board says.
Okay. So just on a more global perspective, and whenever I have these conversations with you, I always like to, we talk about the US, but then the other big player is always China.
Yes.
So when you say let's try to not necessarily invest in the US because it's expensive currently, valuations are high. When we look at Asian markets, for example, we're looking at, I think it's like BYD, for example,
yes,
and other companies in China. What opportunities do you see in China? Because I know that the property market hasn't been doing very well over the last some issues there. But where else within the Chinese market, because it's also quite massive,
yes,
would we look for opportunities potentially?
So the Chinese economy, it's really the world's second largest economy, and to put that into perspective, I'm under correction, but I think in the context of the MSCI World Index, it's only about 3 or 4% in the MSCI World Index. Okay. Now that's just crazy, right? You have the world's second largest economy at around 3% or so of the index. On the flip side, the US is 25% of the world's GDP. Their profits, right? If you look at the cumulative amount of profits that the US generates, it's around 33% of global, let's call it global profits. Sure. But the stock market is, the last time I checked, 65% of the MSCI World Index. Okay. Now you can see there's like a huge disconnect, okay? And for a long time, because of a certain reforms that were taking place in China, investors eventually regarded China as being so-called uninvestable. And many sort of mainstream financial media and financial commentators actually started saying that China was uninvestable. And they even launched funds and benchmarks, such basically saying MSCI World X China or MSCI Emerging Markets X China, for those investors who wanted emerging market exposure, but they didn't want the China exposure, right? Because it was so uninvestable. Now, whenever somebody tells you that something is uninvestable, your ears need to sort of prick. You say, well, let me go and look there. Let me go and look there. right? Like that naughty child, don't go there means go there. Right? Means go there. So now if you did that, and you looked and you actually started looking at Chinese stocks, you would have found, because it was now seemingly uninvestable, that Chinese stocks were exceptionally well priced and really, really cheap. It was basically a fire sale, right? I don't know when Edgar's used to be around, that Edgar's red hanger sale, or red hanger sale, where people run to like mad people to go and get the stuff. That was what was happening in China. It was really, really cheap. Stocks like Alibaba, Tencent, BYD, and various others, a whole host of others, were trading at really, really fire sale prices, because global investors were just dumping the stock, because they were saying China is uninvestable, and because they were getting a lot of scrutiny from their clients or their constituencies as to why they were investing in China. But since then, actually, for the last 2 years, actually, China has outperformed the US. Alibaba is also up something like 93% also year to date. Absolutely incredible. So many of these stocks have done really, really well, and they are still extremely well priced. In fact, everybody talks about how well Nvidia has done, but there are some Chinese stocks that have done even better than Nvidia. So yes, definitely there are still opportunities. There are still opportunities in China, and despite the fact that Chinese stocks have run quite hard, over the last 2 years and the last year in particular, they are still trading at significant, as we say in investment terminology, discounts towards US and European markets. So certainly there's still some attractive value in Chinese stocks. Also, even outside of China, in Japan as well, some great value there. And what has really held the Japanese stock market back for the longest time has really been, remember I spoke up front about currency?
Yes. Yeah.
Now, one of the core components of an investor generating a return, I think perhaps the last time I was here on your show, I sort of broke it down. Yeah. I broke it down where total return comes from, right? The first part of your return is basically what we call the fundamental return, which is how the companies have grown their earnings or their profits, how much dividends they've paid you, right? Then we spoke about the second element, which was what we said was we spoke about the rating change, meaning did the company's valuation go up, say, from using a proxy, let's say a PE multiple, price to earnings multiple, let's say from 10 to 12, then that difference from 10 to 12 of 2, we call that rating change.
Yes.
But there's a third element, which most investors ignore, which is the currency element. And that's why right up front I also mentioned over the last 15 years, we've all investors who have invested their money from South Africa, let's say in the US and so on, they've benefited from the rand weakening for the last 15 years. So that portion, there's another portion of their return, which is the currency portion of their return, has added an additional kicker to their return.
Yeah.
Okay? It's unlikely that additional kicker is going to remain in place in future, because the outlook for the US dollar is actually weaker. But where it's likely to be a kicker is in markets such as China, Japan, for example, where their currency has been exceptionally weak. Anybody want to go on a holiday? If you can afford to go to Japan, right? The currency has been really weak. I know of a friend, you know how he chooses his foreign holiday? He's not interested in the tourist destinations. He looks down, okay, which currency has been the weakest? Which currency has been the weakness? I'm going there.
Okay.
My darling, we're going there.
So the shopping's better.
Because you're getting bang for your buck, right? You're getting bang for your buck, and where the outlook certainly is quite positive as well is in Japan. So you're having some good corporate reforms in Japan. Significant corporate reforms are underway in Japan. Much better corporate governance as well, and at the same time, you also have the potential for significantly stronger yen vis-a-vis the dollar, which will act as a tailwind in terms of your total return as well.
Yeah. So sorry, I mean, those are the global opportunities. But perhaps for our listeners, who are looking at their own investment statements or the market data, what is your top piece of advice for ensuring their portfolio is not only performing well, but it's also aligned with their faith?
Yes, absolutely. I think it's really important that those who have in money to invest, that first of all that they consult a credible and a reputable financial advisor. That's the first step. It's a key part of our tradition that we ask those who know.
Correct.
Right?
Correct.
So that would be advice number one. Advice number two, of course, as we've always spoken about in the past, is no matter what recommendation is made to you by a financial advisor, is to always make sure that you are managing your costs as robustly as possible, because costs ultimately also eat into your return. The third thing is of course is also to have a long-term time horizon, right? Because inshallah, let's say Haji Ali develops a financial plan for a family. It's no good having the plan, but they don't stick to the plan, right? They don't follow the advice. It's really important that they do so. And part of that plan would typically also involve making sure that there is adequate and, in fact, good diversification towards not only South African assets, but also global assets, not only traditional investments. It could also even incorporate things like gold, as an example. It could include things like property, etc. So the financial plan that is devised by, let's say, someone like Ali for a family would incorporate all of those aspects.
100%. Sorry, we've come to another end of the show. I could sit here and listen to you for another 2 hours, as always. But that's probably the cue that we're going to have you back soon, inshallah.
Inshallah.
But shukran so much for the insights. And yeah, it's been another amazing show, and I hope we've added value to our listeners.
Yeah, absolutely. Saleigh, the way we always want to end a show is we're looking not at advice, but that hot stock tip.
Yeah.
What hot stock tip do you have for us?
Okay, the hot stock tip is Novo Nordisk.
Okay.
Novo Nordisk.
Okay.
So Novo Nordisk, it is the world leader in diabetes medication, and they're also the world leader in terms of the treatment of obesity. As a result of a couple of strategic missteps, together with heightened competition, the share price has come down dramatically. Okay. So it is now on a massive fire sale. In fact, yeah, it is really cheap. In fact,
Where is it now, and where do you see it going?
Yeah, well, once again, this is not financial advice.
Yes.
It's the share price. It's in Danish kroner. You are able to you are able to use some of the financial platforms out there to actually buy the stock. The stock is in fact on a valuation basis. It's much cheaper even than the JSE. It's much cheaper than even Aspen. And as I said, it's the world leader in diabetic medication as well as obesity medication. And let's just say the share has lost a lot of weight. over the last year.
Yeah.
So
and there we have it, guys. Stock tips. We have market updates for you. We have great people like Saleigh Salaam presenting the markets and what's happening out there in the world. And if you like the show, please give us a thumbs up, leave a comment, hit the bell icon, and assalamu alaikum wa rahmatullahi wa barakatuh.